The Reserve Bank has put interest rates on hold. So the real question is, what is next? What's going to be happening over the next 6 months in terms of interest rates and property prices? Now, the RBA has been raising rates month after month since May 2022 in an effort to fight inflation. And given they only have one tool, which is raising rates over time, they've only had one previous pause prior to this month's pause in July 2023. Now, there's mixed sentiment in the media around what the RBA was going to do this month and is going to do next month in terms of the August rate review. Now, around 60% of economists are saying there is going to be a rise in August, and there may be another rise in either September, October, or November. So we're expected to see the cash rate land around that 4.35 to 4.6% by the end of 2023. Now, I think there are a few reasons why the RBA has decided to pause this month. The most critical factor is that inflation is starting to get under control. Inflation was sitting at around that 7.3% mark for the March quarter in 2023 and has fallen to around the 7% mark in June 2023, with most recent data looking at around that 5.6 mark for inflation. This suggests that the RBA is actually having an impact on Australia's economy and people are starting to reduce their spending. Spending is what's been driving the inflation and the ease of credit that we had the last 24 months over that COVID period. And now the RBA is trying to tighten its monetary policy and squeeze Australia's economy to reduce the inflation. The other big factor is that the wider economy across the globe is slowing down. There's been talk of the war in Ukraine, interest rates in the US and the UK, and those markets having an impact here in Australia. As the global economy changes, and Australia is one of those big exporters across the globe, a reduced demand for Australian goods is also going to put a decreased pressure on inflation in Australia's market. Now, I think one of the really interesting things here is the way Philip Lowe and the RBA is talking. They're leaving themselves open to create these future rate rises. They're putting a pause on for this month, but not saying they're not going to make future rate rises to pressure Australia's economy. There's also been a lot of talk about the mortgage cliff, and around 500,000 borrowers are going to come off fixed rate mortgages in the next 6 months. And they're really going to feel the hurt as they switch from those 2 to 3% mortgages all the way up to 6.5%, which is where we are in terms of current variable interest rates. So I think the fact that the RBA is keeping their options open, we are likely to have at least one, if not two more rate rises this year. The real question is what happens over the next 6 months as those fixed mortgages roll off and as Australians start to feel the pain. We are likely to go into that technical recession where we have those 2 negative quarters of GDP growth. I think the RBA is also going to keep its eye on trade figures as well as employment to make sure they're not dampening the economy too much. And this all has a lag effect. All these interest rate rises that have happened since May 2022 take time to filter through Australia's economy and for people to actually feel the pain in their mortgages. I know that Emily and I are going through a refinance, and we're going to be chatting with our mortgage broker on the YouTube channel to break down what we're doing with our unit block in Coffs Harbour and how we were able to get a better rate and access some capital through that refinance. And so that's something you can do in terms of taking action. Have a chat with your current bank and look if you can get a better rate by negotiating, calling them up, maybe getting through to their retention team and having a chat and saying you might discharge your mortgage and go to another lender if they don't give you a better rate. So play a bit of hardball there. The other thing you can do is obviously build up your savings. So that's what the RBA really wants, is they want less spending in the economy. And so if you're looking to build up your savings, that's going to protect yourself. And this in turn is also going to pull some demand out of the Australian economy. So given that it's going to take time for these rate rises to have an effect, and there's 1 or 2 more rate rises expected to take us around that 4.35 to 4.6% mark in terms of the cash rate, what is going to happen to property prices? That's probably the biggest question for most investors in the next 12 to 24 months. I don't think we're going to have a market crash. I think there's going to be a slowing in the economy until that cash rate decides to start coming down in potentially mid or late 2024. The RBA might keep the rate at that 4.3 to 4.6 mark for a 6 to 12 month period, depending on how much Australia's economy slows. So I think they're going to keep a real tight watch on that inflation data and property prices are going to be different depending on the location. You can't really look at Australia at that macro level. I think you need to look at each of the major capital cities and each of those major regional locations for their merits. Because through the COVID period, everyone had a Australia-wide boom in terms of market growth. Now we're getting back to normality. We're getting actually back to interest rates that we saw in 2016, 2017, and 2018 in terms of that 5 to 6% band in terms of those longer-term interest rates. So based on all of this, we're going to go back to the standard where some markets will grow, some markets will stay stagnant, and other markets may pull back. I think for me, at a high level, Sydney and Melbourne are overcooked. They're overpriced in my opinion. And I see better value in markets like Brisbane, Perth, Adelaide, I again think has probably had a strong run. I also wouldn't look at markets like Canberra or Tasmania at this point in time, because again, I think those markets are overpriced, don't bring in enough cash flow, and may pull back over the next 6 to 12 months. It's all well and good to report the pause on the RBA, but I think the most important thing, and one of the things I always come back to on the YouTube channel, is how this impacts you. So for Emily and I, we're going through a raise and build project, which starts around about the 1st of August. We've been building up our savings, cash buffers, and we have a game plan when it comes to getting this raise and build project started and finished and completed on time and on budget. Now, our budget might blow out to that $500,000 point. So we've got a strategy to potentially sell our worst performing property and cash out essentially. So get between $150,000 to $200,000 of capital gain and use those funds to complete our build and create more value in our own home. We might then look to use a second or third tier lender in the next 2 years to pull out some of that equity, use it for investment purposes, and then go and acquire other investment assets. The big thing for me is the interest rates are one component. The cash flow is only one component of your property portfolio. Emily and I started focusing on growth assets first and then transitioned to cash flow assets. And thankfully, our property is very positively geared. And so even after these interest rate rises, we're still in a positively geared position. Now, if you're an investor that's going all for growth and you're underwater because every property you've bought is losing money and is negatively geared, you need to be able to prop that up with your day job income. Emily and I know that we needed to go for growth first because we wanted to create equity, create value, and use that equity to buy other properties. So depending on where you are in your journey, I think the next 6 to 24 months, you need to reevaluate your position, look at refinancing, look at your longer term vision and what you want out of your portfolio, and even bigger than that, your lifestyle, and work your way backwards from your end goal to get where you want to be. So for us, that's refinancing, that's potentially selling our worst performing investment and looking to restructure ourselves to get access to more capital to continue to grow the portfolio. I think the RBA is doing the right thing here. They're managing so many competing variables with just that one blunt instrument in rising cash rates. So I think we're going to see a period where the RBA does pause the cash rate, but I don't think it's going to be this month. I think we might sit around that 4.5% mark in terms of the cash rate for a 3 to 6 month period as the RBA sees how Australia's markets are performing, and then potentially they'll ease off the cash rate in 2024 at some point. I'd love to hear from you in the comments below. Is this much needed relief that they finally paused again on the cash rate if you're a homeowner or a investor? Or are you looking to buy and invest in Australia's market and capitalize on these opportunities that we have, given that people are starting to become fearful? Whether you're an owner-occupier or an investor, if you're interested in buying in the Southeast Queensland market, head over to purposeproperty.com.au where you can book in a free strategy session with myself. We'll sit down, have a chat about your situation, talk you through exactly what we do here at Purpose Property, and leave some time for some questions at the end. If you're interested in seeing a playlist of some of our recent client purchases, click this video over here. Thanks for sticking around. I'll see you in the next one. Peace.